Hey everybody, it is Patrick McLain here. As you know, one of your hosts for Reimagine 2020. We're going for 72 hours, as everyone knows. Get super lucky. I was just talking with the guy that you're going to hear from, Paul. I'll let him introduce himself in a second. But we were kind of talking about conferences and what the future of conferences looks like. I would say if there's any benefit to I think where the world is a little bit right now, or virtual conferences, that we get to talk to a lot of interesting people, right? And we can close some of those gaps sometimes, and maybe where we wouldn't be able to have certain conversations that we otherwise would be some barriers either in flying or hotel rooms or costs or whatever. So before I go on too long, I want to introduce Paul. Paul, how do you pronounce your last name?
Oh, it's just Puey, P-U-E-Y, kind of spelled phonetic like P-W-A-Y. So Paul Puey.
Awesome. So first off, how's your day? Where are you at? And what's exciting you about crypto today?
I'm here in gorgeous San Diego. While many people are locked down around the world, we are as well, especially here in the U.S. Although I'm in a beautiful spot to be able to get outside, ride my bike. I did like a 40-mile ride yesterday, get out into the water, do some paddle boarding and kayaking. So I feel like amidst the different parts of the world that are locked down, I feel really fortunate. And so we're in a good spot. Great time over here while still being able to get some work done, right? Occasionally got to put yourself into the room and get into the meetings, get the code done. But it's been a weird ride with respect to how COVID has kind of hit our industry, both the positives and the negatives, both the industry from the viewpoint of crypto, as well as, like you were mentioning, the industry with respect to conferences and physical meetups and whatnot. And definitely something we could talk about and see what the industry has as an insight versus my own.
No, definitely. San Diego is a good place to be, like you said. Usually beautiful weather. I think you mentioned it was overcast earlier, but you're doing it right. If you're going on, you said 40-mile bike ride.
Yeah, it's a bit on the stretch for me. I'm not a huge biker, but it got me the exercise I needed on a weekend. Since I'm going to be mostly in the room in these Zoom calls throughout the week, you got to get outside on the weekends, at least evenings and weekends, get outside a little bit.
Good advice. And for all the students listening, this is what keeps you sane as you go into
Exactly.
your years of
It's the
working in
balance.
business.
It's
Yeah.
the balance. Yep.
So, all right, let's talk about that a little bit, maybe. Like before we get into like Edge Wallet, and I think maybe your place in this space and the variety of things that you work on. How did you what led you up to crypto? So, what were your passions before? What did you do for work? And what was that kind of moment where blockchain resonated with you?
Got it. So let's see. Not trying to take up the entire interview here, but I was definitely technical at heart from a young age. I had been learning how to program since or before junior high, and computers and technology and games were a big passion of mine. After I graduated with a degree in engineering, software, hardware engineering, and went straight to Silicon Valley, worked for a couple different graphics companies, graphics hardware companies, one that almost nobody knows about now to this day because they're gone, Chromatic Research. And then quickly after that, a company that a lot of people know about, Nvidia Corporation. So I worked for Nvidia for a little less than a decade, working with super bright, smart people solving difficult problems. I think graphics, especially 3D graphics, falls into the category of computer science where you have really hard problems and you get really smart people working on them. And I think cryptography is another one of those categories. AI being yet another one of those categories, really math intensive, hard problems to solve. The beauty of what I did at NVIDIA is you could kind of visually see it. Like, people can really appreciate it, even if they have no understanding of how the graphics work. They're just like, oh my God, wow, what beautiful imagery. I worked there and actually kind of burnt out a bit. Got physical issues, repetitive strain, working at the computer for long hours, mostly because I just really loved what I was doing. I was pretty much a workaholic in technology and needed to take a break. And then actually went completely 180 and worked in small business, having almost nothing to do with computers. I operated and ran and worked at bar, restaurant, nightclub, and most recently even a climbing gym. I was really into the outdoors and getting outside and getting in shape. And that kind of was an interesting turning point in my life because I started to see technology kind of on the opposite side, not the person writing the technology, but the person using it. And a slight bridge into that was also starting to see how people interacted with money, especially at the small business side, how we dealt with payment networks, how you deal with PCI compliance. If people don't know what that is, that's the compliance for any business that accepts credit card payments. And so being the kind of somewhat tech guy at a small business, I ended up being the person that filled out the more than 300 question questionnaire that would determine whether or not our small gym would be PCI compliant, realizing that 80% of the questions you had to respond not applicable or we cannot comply. Otherwise, we wouldn't be able to function. Realizing why do they even bother with this type of compliance? And that ringing the bell of, wow, this is kind of a broken payment mechanism. It's just ripe with fraud. And we definitely saw a lot of fraud, especially when I was working at a bar nightclub. You just saw tons of cards that really weren't the owners. And at the end, in like a month's time, when you see that chargeback come in, there's really not much you can do about it. You get hit with that as a small business owner. So credit cards, cash handling, all of that, it kind of resonated from the viewpoint of, wow, this is a bit broken. But at the same time, there wasn't really any other choice when I was working in those fields. And then kind of second to that, being in kind of the health and wellness field, working at a gym, I started to really meet and interact with people that believed in kind of alternative solutions to what large establishment tell you, whether it be how you take care of yourself, what kind of foods to eat, what kind of medical treatment to seek out. And I started being a little bit disillusioned with what I'd call kind of large industry, large establishments tell us and what they tell us as being the truth. And that kind of started off the road and the path at really questioning authority, questioning what they say and saying, hey, I think there might be a better solution to a lot of what we think is truth, but it's just kind of hidden from us. And then in 2013, I discovered Bitcoin. I was just following a financial blogger who talked about, he just mentioned all the trades he did on Wall Street. He was trying to zig when Wall Street zagged. And I didn't really think much of it. And one day he just mentioned Bitcoin. He didn't say what it was. He didn't say why it was revolutionary. He just said, I'm going to put a little bit into my portfolio. And then I looked it up. And from that day, I was not one of the people that looked it up, read the white paper, and put it down. I looked into it and I just went straight down the rabbit hole, became the worst employee at my previous job because I was so focused on learning more about Bitcoin, studying it left and right, and realized that this started to complete the loop. A lot of the industries that lie to us about what is the truth or how we should be living our lives do so because of the financial gain and the accessibility that they have to manipulate the financial gain and the politics around large institutions' ability to manipulate the financial gain. And crypto and Bitcoin was really what I saw as a way to level the playing field, make it where everyone has access to the money, everyone has access to the payment network, and more importantly, it also has the potential to make it where the government and politics don't have the ability to do what they want by simply printing money, right? Being able to pay for whatever initiative they want by just simply printing money and paying for it in that manner. So it fully completed the loop. I loved it from the viewpoint of technology.
So hang on one second. You sound like a little bit of a rebel.
Aren't we all? Aren't we all rebels in this industry?
I'm not sure everyone's rebels. So some people want to be boring. Like
I take that back. Everyone's a rebel, or they just want to get rich. That's really kind of one of the two things. Either like I just want to make money, Bitcoin go up, or you're a bit of a rebel because you think that we should be doing things differently. It's kind of one of those two things. And there's people that are both, right? People that want to do things differently still like it when money goes up and they have that money. So I think this was rooted in rebellion. I think.
So are you both? Are you both? Or are you like more rebel, less rich, like less want to get rich?
I think I want Bitcoin and crypto to go up because it fuels the rebellion. That's what I think.
Yeah.
Right. And my ability to be a part of that is also hinged in Bitcoin being adopted, it going up in price, and other cryptos going up in price, because its price going up is almost like venture capital coming into an industry and helping supercharge an industry with resources. It's kind of that same thing. Now, from my own personal wellness and finance, I want to be comfortable. I don't want to be stupid, stinking rich just because I don't want that kind of target on my head, right? When you're insanely wealthy, that just becomes a target that I don't care for. I want to live just a kind of comfortable, more or less humble life with family, and I don't care about a ton of money, but I do care about that rebellion. You're right. I guess I am somewhat of a rebel, and Bitcoin going up, crypto going up helps fuel it.
So I just want to unpack a few things there, and I would like to maybe just transition back to kind of what first brought you into the space. But like, I think we'll go to PCI compliance. So like thank God for Stripe, right? Like they fix things like this for like tokenization versus a laundry list of PCI compliance. Like really started to enable people to do payments quicker, right? Or drop an API key in something, right? Like really bridging a gap to something complicated and bound that allowed things to be rolled out faster. But I wanted to hit on Nvidia for a second because I think that I've always been interested by Nvidia, and I think like so obviously graphics processors and GPUs, and then and I really started to see maybe what they're and I wouldn't say I understood everything, but like enough about like shaders, right? It seemed like Vulkan APIs, things like this, where like I knew enough that when I really started to see their applications in AI, right? Like the next thing I know, a lot of my friends started buying dedicated cards to process neural networks, etc. And then I think there was like another buy factor when before ASIC systems came out, like Nvidias are flying off the shelves used to even mine crypto.
Exactly.
Did anything in your Nvidia experience, do you feel like kind of prompt you or get you ready for what you would find out later in crypto?
So it helped me understand aspects of crypto. It helped me understand aspects of the economies of mining to a degree, and also understand why mining and mining difficulty had exploded back in, I think, 2014, 2015, just by understanding how GPUs work and in comparison to CPUs, in comparison to ASICs. The thing that more directly affected it was I just liked the fact that crypto is another hard problem to solve, and distributed computing is a hard problem to solve, and I enjoyed my time at Nvidia solving kind of those similar type of hard problems. And the thing that I learned and was able to connect the dots between Nvidia's impact on the mining industry was just simply the fact that a lot of what we do in real life outside of technology is very multitask oriented. It's doing multiple things at the same time is kind of rooted in the success of a lot of different parts of society. And that multitask orientedness of our world and being able to do many things and task switch and know people and remember different things is rooted in GPUs as a whole. So GPUs you can think of as they're basically, and graphics as a whole are just hugely parallel computers. They don't do any one thing very fast, but they can do thousands of things at the same time. And the realization of that while I was at Nvidia was amazing. It was like, oh my gosh, this actually can be applied to a lot of things that we don't realize. It doesn't work well as your general purpose computer to run your Mac OS or iOS operating system, but it works well for very specific computational tasks. And when I learned how the SHA-256 hashing algorithm and most hashing algorithms work, they're actually really simple. They're really small, little, few different math operations you just do across many different kind of inputs. All right, you input some numbers, you do it, and then you get a result. Well, let's do it on thousands of computers as opposed to on one that's really fast. That's the same concept with GPUs. And so my understanding of GPUs and understanding of how they're programmed and what they're good at and what they're bad at will help kind of bridge that gap for me in understanding, okay, I see why they're being used. I see why they're flying off the shelves when price of crypto goes up. And at the same time, why you can also at the same time build ASICs that can even surpass them. So it's just good general technical knowledge, and it helped bridge that gap, help me understand crypto a lot better.
Yeah, definitely. And I don't want to get too sunk in this, but like I think these like kind of interactions are important, right? People to understand, what are the paths? Like how do people actually get to certain places, right? Because I think for a lot of students, especially, like they think their life's gonna go like 1, 2, 3, and like they freak out if at any point they're like, I didn't get to this point by this date or whatever, right? And then, sometimes our careers don't go in that straight line, right? Like maybe we take a detour, and like you said, yeah, mine either, right? Like I remember I was in Africa at one point, right? Like when I was 25, and it's like, you could have said I wasn't in tech, or right, like they're all kind of cumulative in experiences, I feel like, right? So try to, especially students, and I think not even just students, like a variety of people to understand this. So, all right, so you work at Nvidia. you're in rock climbing at one point. You learn a lot of lessons. Maybe you find out some things you like, maybe some things that you don't like. What is the day like? How do you get into crypto? So like, what's that initial trigger? Did you start at one place and kind of end up where you're at now, or did you start with Edge? Maybe kind of walk us through that if you don't mind.
Yeah, so I got into crypto 2013. As I'd mentioned, I was listening to a financial blogger just kind of mention it. I went down that rabbit hole and started researching as much as I could. I remember one of the trigger moments was I was driving to Yosemite to meet up a friend to go climbing. He was coming from San Francisco, I was coming from San Diego, so we were both kind of alone in our cars. And I just put on every podcast at the time, every episode of every podcast I could possibly load up, put onto I guess I had an iPhone by then. And just listened it on a 7-hour drive up there and a 7-hour drive back. And I think it was Let's Talk Bitcoin. I got to credit Andreas. He gave me a lot of the content and knowledge that I needed at that time. When I got back, I said, I needed to get into crypto and do it as a profession. No, not just sit on the side and hodl my Bitcoin, but actually use it. I want to be part of history. I think that's really what I said to myself. I want to be part of this history, which I think comes very rarely. That opportunity comes very rarely. I kind of crossed over the internet era and didn't really do much with it. I was too young and naive. But with crypto, I wanted to be a part of that. And that's when I put in my notice that, okay, I'm quitting my job. I don't know exactly what I'm going to do yet, but I quit my job. I'm going to be quitting. And I remember holding a meetup here in San Diego. It was small at the time, 6 to 12 people would show up. And I said, I wanted to, do a little education. So I taught people how to use at the time, a multi-sig wallet called Armory. And I was just walking through, it wasn't even multi-sig, just a simple like offline wallet. And I was showing people the steps over the course of a 30-minute quick tutorial at a restaurant in San Diego. And halfway into, I said, my God, this is scary, complicated. I could see people like the look on their eyes just glazed over, like, oh my gosh, do you really expect me to do this? And I was tempted to just cut it short and say, I'm so sorry, everyone. This is just way over the head. Even though I know how to do it, I can't explain it to you.
You were about to apologize for all of crypto?
Yeah, I was about to apologize for crypto and for the tooling and whatnot. And I said, well, let me just finish it off. I finished it off and I said, yes, this is incredibly complicated, but this is just an example of what we have today. And that's how I finished it off. And then I said, okay, I want to build something better. And I wanted to focus on one of the key challenges, which is key management. And that's what that talk was about, is how to do key management with this wallet. And I wanted to make that invisible. And I started to realize a lot of history and technology in history where you had a technology that was almost too transparent. Like the user had to see the guts. They had to see the meat in the sausage factory. And then the real advancement and adoption came when that technology got hidden. And users just did what felt natural, but they got the benefits of that technology. And I think that's what I really wanted to focus on. And interestingly enough, that does cause some negative repercussions that we can talk about later. But that's kind of our core focus. We decided to found Edge. At the time, it was called Airbits. And it was mobile wallet, iOS, Android, send and receive Bitcoin. It was really Bitcoin focused. And even had a built-in merchant directory. I was really about payments and getting people to actually use crypto, not as just a store of value, but actually use it. And as I'd mentioned, its core differentiator was key management. You never had to see 24 words or write down a key. You just create an account, log in, but you still held your own funds. I've always been a maximalist about just that. Control your own money. I'm not a maximalist about anything else, but I do fundamentally believe you should control your own keys.
Got it. I mean, a lot to unpack there. And I want to kind of get into Edge a little bit more, in detail, maybe what was the evolution of it, et cetera, but I think they hit on a few points that you just said. I think I think there is this fallacy, right, where people say Bitcoin is like the internet, right? And I think I kind of pull back and I see it more as like TCP/IP, right? Like if you really try to sell crypto or blockchain or whatever as this forward-facing value proposition to users, can be inherently intimidating, right? Where it might end up taking a back seat, where it's more how they benefit from the technology, right? Not that they need to repeat the technology they're using every time. And I think, especially with keys, right, or custody, I think like when people actually look at the benefits of blockchain, a lot of people want to apply applications to it, right? And even what we do in corporations, I look at them at some point, I'm like, blockchain is, or whatever, blockchain is not supply chain, right? Like it might only be your signature process, right? So get your signature process very right? If you're going to do 20 different blockchain use cases or pilots, why would you redo your signature process every time, right? If you know you're going to, that's a core component of every single pilot you're going to do, get that done once right. Now, there might be a variety of parameters or object models, depending on, which platform you're going to utilize, etc. But not to go on too long there, but so you're passionate about custody, you're passionate about key management. Sounds like your journey there, kind of taking a few routes. It sounds like you really wanted to focus on adoption. So when does, it was called Airbits at first, you said?
Yep, companies formed as Airbits and then rebranded to Edge. Yep.
Got it. So you start Airbits, start Edge. What year is this? What was the original product? And then can you kind of walk us through that evolution?
That evolution, got it. So Airbits was, mobile app, send and receive Bitcoin, really about merchant adoption, even had NFC and Bluetooth payments, had that built-in merchant directory, which to this day people say, hey, is that ever going to come back? They love that feature, but realized that was just too early. Payments really isn't the arena of a lot of interest for cryptocurrency, especially with Bitcoin. And our app at the time was 100% Bitcoin, with Bitcoin fees going up, block times taking a while, in the uncertainty of when you'd get a confirmation. It just wasn't the currency for payments. And I think the industry as a whole wasn't that interested in payments. So what we did started to think about in 2016 and really started pushing in 2017. And ironically, when the entire industry was ramping up, we kind of went heads down. And that's when Airbits started to make that transition into Edge. We realized that our core value proposition was key management. And we were actually seeing interest from some decentralized dApps, smart contract apps in having a better key management solution. So what we did is we took Airbits and actually started to rewrite it in a way where the key management was a library, a software development kit, and then it was an application that used that software development kit. And the SDK, we were starting to market it as the Edge security platform, right? You can now put Edge security into your application, whether it's cryptocurrency of an app, such as a dApp, or even for any type of an application where you want to secure data for your user and have it where it's encrypted and only your user can see it. Right? That's what we were offering in Airbits. And now as a platform.
And not to cut you up, but I want to drill down there a little bit because I'm curious. So that was to target, so you were holding that offline, or that was a local SDK primarily bundled on mobile, and you were isolating partition portions of mobile devices that were secure?
Right. So the SDK was a software SDK. It ran on web, iOS, Android, and it would encrypt data client side and then automatically back it up server side. So we did host servers of encrypted data. But the client side SDK is the one that would do a lot of the hard work. Servers is kind of a dumb server saying, hey, authenticate with me and I'll store some data for you and I'll retrieve it. But it was always encrypted client side. Some of our unique offerings was kind of what we call one-touch 2FA. You tap one button and that account gets two-factored, as well as password recoverability of the account, PIN-based re-login on the same device to make it easier to decrypt that data. You don't have to always enter a full long password to decrypt the data. So there were a lot of nugget features in that key management that Airbits had that we then turned into a platform, an SDK for other apps, and then rebuilt our own app, Edge, on top of it. Since during the time of Airbits, we were already calling that SDK the kind of the Edge security SDK. We decided to rebrand the company around that term. It really resonated with our user base. It made sense. The concept of the brand, for those that don't understand, is that we are securing data, not using centralized servers. We're not relying on centralized servers. We're actually securing data at the edges of the network. And if you look at the network topology, there's a server in the middle, and then there's everyone else out on the edges, right? We as humans on our phones and our computers, we are the edge of the network. And that's what we're doing. We're securing data at the edge for the edge. And hence the rebrand into the company, we are now Edge. And then the new application that we were pushing out was now Edge, the mobile app of Edge. But that did take a different focus as far as what we were doing with cryptocurrency. It was no longer on payments.
Well, and I think at that point, and maybe it's an obvious question, but I don't know the answer, so I'll ask it. So was your original goal to kind of serve as a like as an integration SDK layer for external customers that wanted to embed your technology into their applications. And then that kind of evolved into your own ecosystem, kind of in a closed loop where you wanted to offer those services. So yeah, I guess very
So
high
it
level.
was in a way twofold. We said we like this security model that we've built, and there's interest from other companies in this security model. So in the process of rebuilding our own app, we made sure that we built it kind of in two modules. One is the software development kit, the SDK, and another one is the actual core application itself. And we're able to do those concurrently. We, to this day, make sure we have that good, clean separation so that people can use that SDK for their own apps. And we do have a few partners that license the SDK and use it for their own app. Our app itself changed in the sense that both it went, number one, it went multi-assets. Now we support dozens of different blockchains and tokens and assets. And then number two, its focus was less around payments and more around exchange functionality. We wanted to bring to the majority of people that get into crypto exchange functionality without giving up control of their keys with centralized exchanges. We found that those are the companies that were getting a lot of user adoption, right? Centralized exchanges. And at the same time, compromising the core value of crypto. And while that's important for like your frequent trader, right? Your high frequency trader that's setting, complex order types, these limit orders, stop limit orders and whatnot, it wasn't necessary for the average person that's just saying, hey, I want to buy $1,000 of Bitcoin. Hey, today I heard that there's, interesting token synthetics that I want to get. Great. I want to swap some Bitcoin into synthetics. Whatever it is, it's not going to be your very frequent trader. That was the vast majority of people were those type of quote unquote traders. They don't trade very often. And we wanted to provide a product for them so that they didn't have to deposit money into an exchange, then do the trade and then withdraw, or likely be too lazy to withdraw and just leave their money there. Right. We wanted to tie that entire ecosystem together and bring an app that gave you exchange functionality without giving up control of your keys. And that's the transition that we made in going from Airbits to Edge. And now Edge has integrations with 15, 16 different backend exchange partners to be able to both buy, sell, and trade crypto.
Got it. No, it was something I listened for this. I got to listen to a few of your interviews before, and I think it was one of the more interesting parts, kind of how you described it is, I think I heard you describe it as like a non-custodial decentralized exchange almost.
Non-custodial exchange. Decentralized exchange is kind of a slippery slope because people define this decentralized exchange different ways. And
I knew I was gonna mess that up. Yeah, I knew I was gonna mess it up somewhere.
Oh no, it's okay. It's all right. It's like it's not a well-defined category, and we're kind of like treading new ground here. And we think that the self-custody or non-custodial exchange is something that people haven't really brought up as a product. Like people don't have that as a product category. They just think wallet on one side, exchange on the other. Exchange will almost always call custodial because they always say don't leave your money on an exchange. Put it into a wallet. Whereas fundamentally, I think that you've got to define them separately because there are fully custodial wallets that don't let you trade. All they do is hold your money, right? And then there's fully decentralized exchanges. And then on the opposite side, there's the fully centralized exchanges. And then there's this new category, the self-custody or non-custodial exchange. And that's the piece that's been missing, I think, from our world that we're trying to build out. Control your keys, but still allow you to trade.
Well, I was actually totally unrelated to this interview today, but I realized it's relevant. I was reading an article today. I forget the guy's name. They've been suing Coinbase around the idea that like people traditionally reference like not your keys, not your wallet, and the thinking of like custody, and that one day some dude's gonna get drunk and lose his laptop and you lose all your money. But it was the theory around that he had a few hundred Bitcoin on Coinbase, and then there was some swap or something for Bitcoin Cash a year or two ago. And so he had brought a legal precedent that his Bitcoin that were held on Coinbase should have entitled him to some, I forget what it's called, some swap or something at Bitcoin Cash, where he was, if he had held it himself, he would have had like 150,000 output or something from Bitcoin Cash at the time of this shift. But like Coinbase held his Bitcoin, but like he didn't entitle him to this alternate benefit, right? So I think that we'll even enter new worlds here where people are probably binding not your keys, not your crypto, purely to the point of of losing your money, right, in some kind of devastating situation, but that even there might be other circumstances that might
Absolutely.
benefit you, right? I don't know
Oh,
if you know about
absolutely.
that or.
Oh, there's a ton of these. Yeah, definitely. We were right in the thick of the entire Bitcoin to Bitcoin Cash hard fork, the Bitcoin Cash to BSV hard fork, and the implications it would have if people didn't have their own keys. So, I tell this right now, and I actually do not believe that an exchange should be entitled to give any of its users forked coins. I don't believe that they're entitled to, because understanding how custodial systems work and how incredibly hard it can be to give users access to the forked coins, and how easy it is to fork a coin and give it any amount of value. I would say, yeah, if you leave your money on exchange, do not at all expect and feel entitled to get any of the forked coins. You are holding a balance of a very specific currency with that service, and that's it. You're holding a balance of Bitcoin. You're holding a balance of Ethereum, not Ethereum Classic, not Bitcoin Cash. Now, if you're holding your own keys, you're holding whatever those keys could possibly control, whether it's the Bitcoin today or the Bitcoin Cash tomorrow or the Bitcoin pizza, that happened back in, 2018, all those stupid coins that got forked off from Bitcoin Cash. But that is a fundamental problem. If you don't hold the keys, you don't control anything that key can control, such as even voting rights for certain blockchains, delegated proof of stake type of voting. And any of those exchange providers or custodial services, more specifically, need to say, yeah, we're going to offer you the ability to use our keys to vote on behalf of your ownership of that coin. So I think this will start to grow over time, like the need to own keys, not just for the balance, but for other purposes. And for that same reason, I think we need this new category of exchange. We need the self-custody exchange, because a lot of people don't exchange a lot, but they want that benefit, that long-term benefit. And we'll leave it to the high-risk traders, or the people that are already, day trading, that can't incur the delays of blockchain transactions going in and out of an exchange. They'll be the ones to leave their money there. They'll do the fancy order types, and they're already taking a risk with how they trade. They'll also take that custodial risk of an exchange getting hacked, and they're also giving up control to be able to vote. That's not their interest. Their interest is high frequency trading. Everyone else, let's put them onto a self-custody exchange.
Got it. So, everybody makes fun of me. Like I bought like every right to like Bitcoin for Christmas and like every derivation of it. Like I'm a big person. Like one of my first companies I was young was like home automation. Like I'm really big on like helping consumers kind of bridge the gap of whether it's hardware or software, making it easy for them, right? Like how do we get grandma to understand this? My model is my grandmother, like always, hey Patrick, my things don't work, right? Like I try to think like, how do I explain this in layman terms? And like, so let me just kind of back out a little bit. And I would say, okay, most exchanges, and I correct if I'm wrong, if I think Coinbase or I think Binance or whatever, they probably want to hold as much consumer or retail customer assets as possible. Would you say that's fair? Like it's in their best interest to control these?
Not exactly. And I think it's become more and more clear that it actually has a detriment for them. In many ways, it is a benefit, especially if they start to behave like traditional banks, where they take your assets and actually loan it out.
And do you think that's what's happening?
Oh, I'm
Like, do
sure
you think
it's
that's
what's happening. I'm sure it's happening with some of the services, not all, but definitely happening with some of the services. But if they don't do that, because there is a lot of security issues with that, and the concern of a bank run, where people start to withdraw their money and suddenly it's not there because you've loaned it out. If they don't do that, then it actually costs money to hold money. Imagine, why would a bank hold your money at no cost and not be able to make money on it? There's no benefit to that, to them.
BitGo's not cheap. Fireblocks
Bitcoin's not
isn't
cheap.
cheap.
Yeah,
Prime
and
Trust
hacks
isn't
aren't cheap.
cheap. Like,
And
right.
hacks aren't cheap, right? You just
Yeah.
make a bigger target for your company by holding a lot of people's money without the ability to pay for that security. So they're really going to go down two paths. These are the only two paths. They either loan out the money or they charge you for it. That's really it. So if you don't see a fee on your money over the long term, I think right now that's not so much of an issue, because we're still early in the industry and they're just thinking, well, if we hold the money, we'll get people to trade it more often. But there's a lot of idle funds, like funds that just sit there that no one uses. And by exchanges holding that, they just incur a bigger and bigger risk. And I've actually heard some exchanges say, we don't want to hold money for people that don't trade. We want that to be on their own keys. It's just too much of a liability for them. But it's not all the exchanges that say that.
And then what are the roadblocks in not doing that? Like, it's that they have to kind of educate their customers. And is that kind of how you feel like there is a customer education process here, or explain to people these are the benefits of ownership, right? And is there a sacrifice between convenience and self-ownership?
Oh, there's always going to be that sacrifice for sure. We've been focused on trying to minimize that sacrifice. Minimize the sacrifice as far as user experience from when you have self-ownership, but there always will be one. It takes as in a clean example, if I have money sitting on a custodial exchange and say that money is sitting in USDT and I want to buy Bitcoin, there's just about no delay because nothing moves. There's no blockchain there. There's no blockchain interaction. It's just a balance on a spreadsheet, database saying it's going from USDT to Bitcoin. If I want to trade USD to Bitcoin on a self-custody exchange, even using decentralized exchanges, you are limited by block times. Now that's improving with different technologies. Things like Lightning actually can help improve exchange experiences. I've actually not been a big fan of Lightning from payments. I think the user experience to the consumer is actually not a very good experience. However, from an exchange point of view, it can be awesome. You can have super fast swaps. That's a piece where I think it can revolutionize and actually remove a lot of the liquidity from centralized exchanges into decentralized exchange experiences and self-custody exchange. But there is a sacrifice today. You're right. And so a self-custody, decentralized exchange, non-custodial exchange will be, generally speaking, slower from the viewpoint of when you get one asset and turn it to another. It is in a way faster though than if you wanted to hold your money but use a centralized exchange. Today, you'd have to go deposit, wait for confirmation, log back in, issue a trade, wait for the trade to settle, log back in, withdraw, probably do a bunch of 2FA, blah, blah, blah. And there's withdrawal limits, and there's only certain times when the exchange might do withdrawals. That whole process is really slow, right? The full cycle loop of holding your funds, going to an exchange, and then holding your funds again is really slow compared to using a DEX or using something like Edge. But if you just keep all your money on this exchange, then it's very fast.
Sure. Well, and I don't think people truly understand the technicality of, like, when they're holding their money on centralized exchanges, that their balance is represented on, some type of malleable database, right? So like they don't really have one Bitcoin, right? It's a representation of something incrementing or deducting from some database layer. But like you said, right, there's, and this is like such a complicated topic. And I always
go on for hours.
Yeah, well, no, I think to me it is kind of a bit of a broader conversation, right? Because I think part of what has happened in society is we have like a few thoughts. So we say, okay, if my email gets hacked, I can reset my email, right? Or there's some password, or there's some ripcord. Or if my debit card gets hacked, that the bank is going to refund my money, right? Or when people accept a privacy policy, they are usually racing for like a very quick dopamine hit where they just click accept, right? And I think even if you take like privacy policies, you kind of start to bridge a little bit, where on mobile it gets a little better, right? Where when you download a mobile app, at least now it gives you 3 to 4 bullet points, like this app will access your GPS or will access your camera or your location. Where on the desktop format, we actually don't have what I think is like such a good solution for that. You kind of have to read this whole privacy policy, right? So I think humanity, from my perspective, kind of has a decision to make, and I think one thing I always ask people is, especially, I don't know, I'm 35, so like I just at my age say, okay, where's your social security card, right? Or where's your birth certificate, whatever. And I think kids like 20, 25, even before they're 30, they left their social security card like at their parents' house, right? Like in their parents' safe, right? Or like, and they only need it like once every year or 2 years or 3 years. Maybe they apply for a new job or something. They say, why did you leave those documents? Of all the documents in the world, why did you leave those documents at your parents' house and you're safe, right? And they say, oh, like it was almost they were trained from a very early age to say, if someone gets access to these documents, it can be very bad for you, right? They can steal your identity. You don't want to lose these documents. And if you lose those documents, there's a lot of hurdles to reproduce them, right? So you can't just pick up the phone, or you can't just send an email and say, send this to me. You actually have to go down in person, etc. So I think from societal norms, we have already started to establish some practices that say these documents should be more secure. And if we lose them, there should be many hurdles to recreate them. Then I think with technology, we have kind of accelerated access. We want accelerated access. So we'll kind of drop our guard a little bit, right? And then therefore we kind of assume mistakes are going to be made or access is going to be taken, but we just know that that's not really going to affect our life that much, right? But then you see an Equifax hack and you see all these other things. So I do think that we will come to a breaking point that says, do you care about your privacy? If you care about your privacy, do you want to go a little farther to protect it, right? Or do you want to make it easily resettable, right? Like, do you want to be hard to get to or not? So I don't want to go on too long there, but I think I hear quite a bit about what you're saying. I know we're running a little over here, so I don't know if you have a hard stop, but I'll keep going until you have a hard stop. Just nod your head or something, or give me a signal. Today, so it appears like in the last 8 to 12 weeks, the market's back on fire. Like I'm almost shocked. It's like I almost at first was mad at DeFi. I was like, man, like people are throwing DeFi around like it's pretty loose. But if it's a good marketing campaign to help this industry, so be it. So what do you think is happening right now? Like, how do you feel about the momentum? Do you think that we're kind of getting back to 2017 space where there's a lot of like things happening, but not a lot of things getting built or no accountability?
So I definitely don't think we're ever going to get back into 2017. I think 2017 just had euphoria to levels never seen and we'll never see again. It was just stupidity at its highest level. And so no matter what happens in DeFi space, I don't think it'll ever get to that high. What I do think is happening is, ironically, some of the products that were ICO'd in 2017 and have been building and showing like true use of crypto and blockchain are showing interest now. Like it took a while to build and get them into production. Like Compound was an ICO from back in the 2017, 2018 era. And that's one of the projects that are, seeing skyrocketing use today. Now, the way it's being used today is a bit 2017-ish in the sense that it's, this entire concept of yield farming and getting tokens. Oop. Sorry, you're muted right now, Patrick.
Sorry. No, I'm saying, what are you saying the way, what is being used today? Like the term DeFi or the technology or what?
No, the technology is generally speaking supposed to have a more specific real life, solve a real problem use. So as an example of how one might realistically want to use Compound, I've got some asset and I want to be able to use it as collateral for another asset. And a typical thing that you'd expect a well-reasoned person to use it for example, I have a whole bunch of ETH and I don't want to sell it. I want to put it in and collateralize a loan in USDC, USDT, and then I want to be able to buy a car. So I want to be able to literally like buy a car, and people can and probably have done this already with services similar to Compound, but maybe even in the centralized space where you go to a centralized company and you give them Bitcoin, and in return you get dollars. This is what Salt kind of initially pioneered, but now it's being done in a more decentralized way, with the DeFi at its core. Then there's the concept of, let me look at the exact yield differences between all the different coins, look at the high risk, and know that I'm actually going to receive, for example, one of the big explosions in DeFi was the fact that Compound was airdropping comp tokens to people that had a lot of, that had either taken out a loan or put in money to help fund a loan with a really high interest rate, right? Any of those people received a large allocation of comp tokens. And because comp tokens had increased in value because people were hearing about the airdrop in comp tokens, created this little feedback loop that caused both the token price to skyrocket and the liquidity to skyrocket. No one actually using the money for any real life purposes, just trying to farm some gains around the system. using and heavily banking on the increase in value of a single token that doesn't actually have a reason for it to have value. So that I think was a little 2017-ish. But I think, numbers have already come down. That yield farming boom is already starting to slow down. And then what's left now is the real use case, which still exists. So I think, hopefully I do have a bit of a hard stop in 4 minutes. I'm going to summarize a little bit with this concept is that, Bitcoin was founded as, decentralizing money, kind of the base layer of all of financial services is money. To some degree, you can think of the first decentralized app on top of a decentralized money as just simply sending and receiving it, right? That is an app. A basic wallet from back in 2013 was a DApp, but the only functionality it gave you is send, receive. That's still an app, and it's still, accessing it in a decentralized way. Now, if you think about our current financial world, though, those two are a small fraction of the products that you build in a financial system. In addition to that, you need insurance, you need loans, you need hedging. And that's what DeFi is building to try to complete all of those layers. There's the money, there's sending and receiving of it, and then there's layers on top of it. And I think that's necessary for people to be interested in money in the first place, because it's not just the money that you can send and receive, it's all the different products on top of it that you need as well for a functioning economy. So I think DeFi is critically important for the adoption of crypto as a whole. Now it's just a much more complex product with a lot of corner cases and potentially a lot more bugs than just the simple DApp of send, receive. But we'll get there.
And you kind of see that as just the ability to execute code in a smart contract, more or less. I mean, that's the major barrier. Like all the other tools are there, and then it's taking economic theory and putting it into smart contracts.
It's not so much economic theory, but economic products, right? It's taking economic products that needed a counterparty and putting them into smart contracts. Just like the first economic product was send and receive digital money, right? That was not possible without a counterparty. Bitcoin made that possible. I can now send and receive money without a counterparty. Now it's, can I take out a loan without a counterparty? Can I take out insurance without a counterparty? Can I hedge? Can I get leverage on a product without a counterparty? Those are all tools that maybe to the average consumer they don't see, especially low income, where all they literally do is send and receive their money. But they don't realize that that's the foundation of a lot of society and a lot of the economy is these more derivative products on top of money. And so if we can do all those things, we don't have to fall back to the centralized services to do that. We don't have to fall back to not to knock them. They're actually an investor in our company, but BitMEX, fall back to BitMEX to do leverage type trading. We can now continue to stay inside of the DeFi space into the dApps, not just for send and receive, but for the other products as well.
Well, I know you got to run. This is one of those interviews that I wish we had more time. I'm going to try to hook you with some of my people in San Diego. I'll
for sure.
Lunch.
Always love to meet some more crypto folks over here.
You'll like these guys. But hey, if we got you for one more minute, for the kids listening right now, for all the college students, if you're in school today, during COVID, you were thinking about you go back to time, how would you approach blockchain today?
So I'll at least answer this for what I think is the majority of the students that are in the technology space is if you're in crypto and you're a developer looking to write code, probably the biggest thing you could do and the most accessible thing to you is the fact that there are dozens, if not hundreds of open source projects out there that you can contribute to. Go on to GitHub, look at the apps that you're using, use apps that are open source, and look at what you would like to improve about them. What little feature would you like? Most apps you work with today, you have no ability to affect that app unless you've got a job with that company. If you're using Snapchat, you're using Twitter, your ability to add another button somewhere is next to zero. Not true in the cryptocurrency world. A lot of that work is sitting there open source in GitHub, and you can put up an issue, offer to fix it or to implement it for free, and you're building your resume, right? And that's something you could do even without the physical conferences and meeting people in person. Just show some interest level in a project, in an open source project, and that's a huge foot in the door, not just for that company, but you now use that on your resume for all the other companies in crypto. And that I think is probably the single biggest thing you can do as someone in the developer technology space interested in crypto and wanting to work in the space.
Paul, I know we're running over. I will follow up with you, and we're going to see if we can talk more or do whatever we can, either help students, build cool shit, whatever. But thank you very much for your time, and good luck on your next meeting, whatever it is. And any last words before we go?
No, that's it. If anything, definitely give Edge a try, edge.app, and let us know. Send us some feedback. And for any of those students, if you want to work on it, it's open source inside GitHub. So definitely let us know, reach out, and keep in contact.